Cambridge International Examination. Paper Code 7110, May-June 2014. CIE solved past papers with explanation. We are discussing topic Final Accounts of Manufacturing Business. Paper Code 7110-22 MJ14. Question 3, Cadmore Limited. Cadmore Limited manufacturing business is discussed. Cadmore Limited is a manufacturing business. Following information is available for the month of April 2014. It means the manufacturing statement is to be prepared for a month. Inventory at April 1, 2014, that is at the beginning of the month. Raw material inventory is this. Work in progress is here. Finished goods is this. Factory wages, which are also known as direct wages, are 6690. Office wages, which will be ignored while preparing the cost of goods manufactured and will be used in income statement, are also given. Purchases of raw material, which we use in the raw material consumed for manufacturing account, is also given to us. Depreciation of factory machinery and office equipment, both are given. Factory machinery depreciation is used in cost of goods manufactured, while office equipment depreciation is used in income statement. Rent of factory building, rent of office building, both are given. Factory building rent will be taken in cost of goods manufactured FOH portion. Office building rent will be taken to the income statement expenses portion. Royalties. Royalties are the direct expenses. They are basically the cost paid for the invention to its real owner because we are reproducing his invention. So these are direct expenses and are taken in the cost of goods manufactured statement. Factory management salaries will be taken in the FOH portion. Office management salaries will be taken in the income statement expenses portion. Revenue is used in the income statement. Insurance and general expenses mostly belong to the income statement. Additional information on inventory at 30th April, that means the ending inventory of all raw material, work in progress and finished goods are given to us. Insurance to be apportioned 80% to factory and 20% to office. So this insurance 1250 multiplied by 80% will be taken in FOH and remaining 20% will be taken in income statement. General expenses 5000 are for factory, so we will take 5000 in FOH portion of cost of goods manufactured and remaining 3000 will be taken to the income statement expenses portion. These are the requirements in the question. They want you to explain the term direct cost. Direct costs are actually the expenses directly related to the production of goods. Second question, state two direct costs incurred by Cadmore Limited. So mostly the direct costs are the raw material consumed, direct wages, or you can say any other direct expense which is made to produce the goods in a factory. Second requirement, requirement B, is about the manufacturing account of Cadmore Limited for the month ended 30th April 2014. Let's have a look on their manufacturing account. As discussed in the format, there are four major portions in manufacturing account. The first part on which we are working is the cost of material consumed. While calculating cost of material consumed, we need opening inventory of raw material, we need purchases of raw material. If there is any carriage on the raw material, that will be taken here, but because in this question carriage on raw material is not given, therefore we will skip it. Closing inventory of raw material will be subtracted, and that is how raw material consumed will be utilized by us. 8670 is the amount which needs to be underlined because we are actually adding these two amounts. So these two amounts are added and given 91,500 to us. Raw material ending will be subtracted from this answer and we will get finally the raw material consumed. Second portion of the manufacturing account. Factory wages, which are also known as direct wages, will be added in this. Direct expenses is the third portion of our manufacturing account. Only one direct expense, that is royalties, is given to us. These three together are added and the answer is always called prime cost. Raw material consumed, direct wages and direct expenses, the total of these three give us the prime cost. In prime cost we need to add total factory overheads. So let's prepare a list of factory overheads. This is the fourth main portion of our manufacturing account. In factory overhead we take all indirect expenses like machinery depreciation, rent of factory, factory management salaries, insurance, general expenses. All those expenses which were given to us in the question and are not directly linked with production are termed as FOH or factory overhead. So these factory management salaries, these portions which are given to the factory expenses will be taken in FOH. Depreciation of factory machinery will also be taken in FOH. So these are the factory overhead items which we had listed here. The sum of all these items will be written in this column and this total FOH or factory overhead is actually to be added in the prime cost. When we will add it in prime cost, our final amount will be termed as cost of production. This could be the final result of manufacturing account, but if work in progress opening and work in progress ending are given to us, they are to be added and subtracted in this cost of production. Instead of doing turn by turn, we will see the result or the difference of these two. 12700 minus 9980 is actually 2720. This is greater, so it will be finally added and we will get the cost of goods completed or the cost of goods produced in 1 month for Cadmore Limited. So this is the manufacturing account or the cost of goods produced statement for Cadmore Limited. Like, share, subscribe, Commerce Lecture Online.